for traders who may be new and may only feel comfortable trading long positions. Question is, how do you trade shorts? How do you trade sell pressure? Well, the answer is really quite the same as how do you trade buy pressure or longs. It's just in the other direction. And if you ever wondered, should I short or should I long? Look at the chart, read the VEPS info, and if you're not sure about it, first of all, don't enter positions you're not sure about or extremely confident about. Second of all, invert the chart, right? If you're wondering if you should short it, invert it and see if that's something you would long. In other words, let's say you're trading Bitcoin against the USD. So, if the position of the asset is such that you're not sure, let's say it's fallen a bunch and you're wondering, should you short it now? Or does it look like it might turn around or just go sideways? All you got to do is invert the chart. If you're the kind of person who likes to only long, and see, does it look like it's going to keep going up or not in the inverted position? Right? Does the dollar look like it's going to be stronger against Bitcoin? Or does the Bitcoin look like it's going to start getting stronger against the dollar? Now, it may sound like a half joke to you, but it really isn't. When you invert the chart, it will give you a different frame of reference to see, right, the perspective of the other side. And sure, you can say, well, the other side can also look at the chart normally of BTC USD. Yes, when you look at it from the perspective of the dollar against Bitcoin, then you can see, from the position of somebody who likes to long, for example, if you do, whether or not it has fallen enough, and whether or not the Bitcoin has fallen enough against the dollar. In other words, whether the dollar has risen enough that the dollar is now going to flip around and start falling against the dollar, against the Bitcoin, or whether the Bitcoin is likely to keep going. And again, you know that. You don't have to flip the chart, obviously, if you know how to read the VEPS info correctly. But it's just an exercise to help you see, because sometimes people will look at a chart and get confused by what they see when it's frankly usually pretty clear. The reason for that is because price candles will deceive you. They are in fact designed to do that in a way, right? Because really, what is a price candle? It's just showing you pixels of where the price action has been and is. In theory, you could have it be all in one line. So for example, you could look at Bitcoin on like a 20-year chart. It would still be on the first candle, right? So it's just a pixel going up and down, up and down, up and down. Where along that vertical line do you think it's going to move next? Up or down? As you break it out into lower time frames, you get more candles. The more candles you see, the lower time frames you're on, the more candles for a given period of time you're looking at, the lower the time frame you're on. That's all. And so that's why an easy way to get your mind out of a funk and be like, I don't know if I should long or short, just play around with the charts, right? Flip the charts. Realize that price action candles are quite literally tools of deception. They're meant to make you unsure. They're meant to make you lose confidence. That is why, for many years, and even today, professional traders and institutions very often don't even look at price charts. Sure, of course, they have monitors with price charts on them, whatever, but they're really looking a lot at spreadsheets. Right? They're looking at numbers on spreadsheets for targets for entry and targets for exit. That's what and the size of their position, etc. They're really not looking at whether or not the price action candle is moving up or down, if they're serious professionals who don't just trade with Voodoo TA or gut feeling or naked trade. I know there are some that do. I'm not saying there aren't, but those are by far in the minority, especially now in 2024 when quantitative traders, people who work at HFT firms, people who work at large algo shops where they build huge algorithms for themselves and for their clients, right? They're not looking at price candles in the sense of as their primary indicator. They're really, really not. What do they care about? The same thing we care about at Alpha Trading. They care about the returns. What do the returns mean? It means the returns on investment. They don't care if the price goes up or down, because price of an asset is really moot. What matters is your percentage returns, positive or negative, and being able to capitalize on whether those returns go up or down. And the way you do that, obviously, if the returns are going up, you want to be in a long. If the returns are going down, you want to be in a short. And obviously, that's what matters a lot is the correlation, and whether or not there's any divergence forming on those returns, between those returns and the price action, because those are in fact the only divergences that matter the most, is returns divergences and entropy divergences. And again, at Alpha Trading, we have the tools and the methods that we use and that we educate about for free to learn how to do all that. So how do you handle sell pressure? Again, all you do is read the VEPS info, the same as you would do for long trades, for buy pressure trades. If you're looking to long, you have to know that the VEPS information is correct. And again, what is the VEPS? It's volatility, entropy, probability, and statistics. That's what the VEPS is. Right? It's a phrase or an acronym we coined. We just call it that because it's faster than to say all those words each time. But if you trade the VEPS, if you use the VEPS to trade, right, then you are quantitatively, measurably, mathematically at an advantage over people who use Voodoo TA, who rely on completely irrelevant art and information, chart art and Fibonacci lines and random averages of where the price was. None of that matters. If you're a high frequency trading shop, you're one of the companies that runs the market, right? By running the market, I mean you are running more trades per second than an average person will run in their lifetime. And so in so doing, you literally are running the markets because you're running most of the trades on the market at any given time, on any given asset, in any given asset class, on any given market. You're running, around 80% of the trades, sometimes less, sometimes more. But retail is usually not running more than 20% of the trades, 30% tops. And that's because even if you add up the 55 million crypto traders and add in another 100 million or 200 million regular traders who are really just mostly degenerate gamblers using traditional TA, or as I call it, Voodoo TA, those people, they're running, even if they're using little cheap bots to run their trades, they're not usually running thousands of trades per second, let alone millions of trades per second. They're usually running at most, a couple trades a minute if they're using cheapo bots. And their cheapo bots have no chance against these massive high frequency trading firm bots. Because first of all, those cheapo bots also use Voodoo TA, right? And second of all, bots don't always work correctly, so you still have to manage them. And most people aren't fast enough to manage a couple trades a minute. And third of all, Most people are actually running without bots, right? They're just manually running scalps. I run my trades manually. I don't run bots because I know that the cheapo bots don't work. Even if I plugged in my indicators to them, our VEPS indicators, and told them only make these moves, they would not still get it right a significant enough amount of the time. They'd be running, frankly, riskier trades because they wouldn't be getting out necessarily at the right time to take profits. They also wouldn't necessarily be getting in at the right time because they don't always work. There are glitches in the system. You need to fix things a lot when you run those things. So there's quite a lot of manual labor involved. Yes, computer-based manual labor, but there's a lot of manual management of those little cheapo bots, which is why I don't use them. Now, I know there's people who want us to, make our tools even more connectable than they already are. You can connect them. I just don't recommend it. Because, again, through experience, I have seen, and through also other people's use of them this way, I have seen the data, and the data suggests very clearly, demonstrates very clearly, that trading with bots at the retail level is just not a sound idea to be consistently profitable. Right? The companies selling the access to those bots are in the business of selling access to the bots. They don't really care if their bots work or not, as long as they keep onboarding more customers. They work enough that your typical bad retail trader, who's anyway losing most of their money or all of their money, right, over a period of a few months, they work well enough to convince those users, hey, this is a good idea for 1, 2, 3 months, maybe 6, maybe a year. But eventually, those traders will lose their money because they're using traditional technical analysis. Traditional technical analysis is a scam. Okay, now you could argue to me that before 1970, before Black-Scholes came around in the 70s and gave their amazing options trading formula for volatility, that traditional TA was the best thing since sliced bread. Okay, maybe arguable. I still think it was garbage, but there were more people using it because there was no way to trade volatility properly since Black-Scholes had not shared their wonderful formula. But since then, right, there's a reason that professional options traders shifted to trading volatility. And the reason is it works better, it's consistent and reliable, it lets you have a higher degree of confidence, and it lets you be less uncertain of your trades. And that, after all, is what traders are looking for. To have higher confidence, and to have less uncertainty that their trades are going to go the way that they want. So that is basically the long and short of it, if you will, pun intended. If you want to trade sell pressure, and you should if you're a day trader, you should be trading sell pressure, you should be trading long buy pressure, because that's the only kind of pressure that exists on the market. Right? Remember, even if you're just, I only want a long, well, guess what? When you close your position, what button do you press? You press the sell button, right? Just like when you're selling, if you're shorting, what button do you press to close the position? You press the buy button. So in either case, you got to press both buttons, just in a different order. So don't get demoralized or frustrated by the fact that some markets may see some action going to the downside. All you have to do is just flip the direction you're trading and take advantage of those shorts and take profit when the asset hits your targets. Don't get stuck in positions thinking you can swing trade extremely volatile assets. That is my friendly advice to you, whether you're longing or shorting, always remember to take your profits early and often. Limit your loss, and don't be emotionally attached to your trade. Oh, hey, yeah, I see your comment. How you doing, Kiko? Good to see you. Thanks for the sub, man. Appreciate it. And by all means, you know, if you follow those 3 simple rules of taking your profits early and often, of limiting your loss, meaning if you enter a trade and it goes against you, you get out as quickly as possible. And if you don't trade emotionally, in other words, trade like a bot, in the sense of bots don't have emotions. In that sense, you can be the bot. Right? If you take emotions out of your trading, you can have emotions about your trading, but save it for after the trade is done. Make sure you don't trade emotionally, because that is exactly how traders get wrecked. They feel something about the trade. The moment you feel something about the trade and you're not already a consistently profitable trader with a whole lot of trades that are consistently profitable under your belt, the moment you feel something about your trade, oh, I feel it's going to go up, I feel it's going to go down, I feel it's going to go sideways, you really probably should get out of the trade. Only stay in the trades if the VEPS info tells you to stay in the trade. Only get in the trade or get out of the trade if the VEPS info tells you to get in or get out of the trade. That's really all you got to do. By the way, again, if you want to learn how to trade the VEPS, it's completely free. Just go to alphatradinghq.com/discord and get your free access to our volatility starter pack. You can do that by opening up a request ticket or support ticket. Go to the request support channel and just, ask for your free access to the volatility starter pack. You'll get free indicators, a free chart. You can get free education. There's free, tutorial videos, free how-to instruction information. Like, it's chock full of, there's tons of info there about every indicator that you're going to use. And obviously free access to the chat and to the live streams. We do live streams Monday through Friday starting at 9 a.m. Eastern. So we cover things before the traditional markets open, then we cover market. And obviously we go over Bitcoin and Dixie and whatever, big assets there are. Plus we'll look at anything that, anybody in the live chats wants to ask. And by the way, we don't run our live streams on YouTube anymore. We run them on Rumble, because for reasons. So anyway, if you join our Discord, you will find all that information there, and we'll be happy to have you there, and give you a free education about how to trade volatility, entropy, probability, and statistics. We are a community of traders. We created it as a place for people just like you and me to be able to learn how to trade volatility, entropy, probability, and statistics properly. Basically learn a better way to trade than what you get in traditional voodoo technical analysis. And the statistics and the results speak for themselves. We've been doing this for years. We are a tiny community. The reason that we're a tiny community is because most people don't want to learn how to trade properly. They want easy things. They want signals. They want simple tools that they think work, but actually are designed to fail. And that's why they keep being marketed those tools by the highest end of the financial industry. The HFT firms and the algo shops, they will never use Voodoo TA. They don't use it. Okay, you can't trade SMAs and EMAs and Fibonacci's and triangles and wedges and channels running millions of trades per second. You think their bots are drawing millions of random chart art things every second, looking for expected moves and all these other silly things? No. They trade the means, they trade the returns, they trade the volatility, they trade the variance, they trade the entropy, they trade, the top ones trade the entropy. Figuring that one out, but we've already figured that out, and as a retail community, I think we're the only one that really has anything like our entropy indicator. There is another way to trade entropy that involves different indicators, but there's really only one community that does that, and we don't work with them anymore for reasons. But our entropy indicator is far better, and it's a unified indicator, so you don't have to use multiple indicators and break your head over it. We have all kinds of interesting tools that we've created over the years that frankly no one else has, like the RMLR, and like some other things that are currently in development that I can't even mention right now, but they'll be out soon. um, and many other things actually. But yeah, we've developed a whole bunch of indicators, more than 40 we've already released in just the last few years, and that we keep upgrading and updating because we want to make it as easy as possible for retail traders to actually trade well. And we're not selling you anything. We're not giving you links to our affiliates. We're not giving you links to exchanges that we want you to get onboarded to. We're not selling you that crap. We're not selling you courses. We're not selling you psychological books, all that garbage. You don't need that, right? You need to learn a better way to trade. So if you're sick of getting wrecked, or if you're new to trading and you haven't gotten wrecked, God bless you. Good for you. Don't get intoxicated by Voodoo TA. It's just going to poison your mind. Or if your mind is already poisoned by it, and it's okay, we've all been there, myself included, even though I knew a better way to trade before I tried Voodoo TA, and I still tried it like a fool, right? But I tried it anyway, and I saw it didn't work. I mean, I managed to do okay with it, but only because I managed my risk extremely well, right? And trading is a lot about managing risk. That's probably the number one strategy you have to use is risk management. Don't take positions that are too big, that you can't handle. Get in and get out quickly. Take as much profit from the market as you can. Don't let it take profit from you. You know, if you're in a profitable position, get out, take your profit, make that profit, go switch from unrealized P&L to realized gains, realized profits, because if you don't, you're not a profitable trader, right? Because the volatile markets will turn around on you. They will, what do returns do? They're constantly distributing away from the mean and then mean reverting. That's all they do. The returns move away from the means and returns mean revert. And price action does not, right? Price is random in a random market, and most of the time the markets are random. But price action, if it does anything, it follows the returns. It doesn't lead. Price action is a lagging indicator. Price action is a result of the executed difference between the ask and the bid. Right, the different prices of the buyers and the sellers. That's all price action is. It is a result of the returns. So anyway, keep that all in mind. Hope to see you in the Alpha Trading Discord. And hope to see you in the live streams. But most importantly, join the Discord, learn how to trade, a better way to trade using the VEPs. Any questions, you see me in the Discord, or even if you don't, just post questions. And if I don't answer you, somebody else for sure will. And the beauty of our tools is you won't get 100 different answers that are all confusing and contradictory. Our tools work the way they work because they work. Just like if you use a screwdriver, it works the way it works because that's the way it's designed to work. Or if you use a hammer, or if you use any other power tool, or chainsaws, hedge cutters, whatever it might be, a shovel. These tools all have single purposes and they do their thing, and that's what they do. Our tools are the same thing. They all have their purpose. They do exactly what they do. They don't do anything else, and you don't have to counter trade them. You don't have to learn how to counter trade our tools, right? Even if you can, it doesn't matter. You don't need to. You go with the probabilities, not against them. And when you trade with the probabilities consistently, then you will consistently win. Yes, you'll lose some trades, or meaning you'll get out of the trades very quickly and you won't make a profit. Maybe you'll make even a tiny loss on the individual trades, but overall, your trades will be consistently profitable if you know how to read the VEPS information accurately and take the appropriate relevant action. Once you know how to do those two things, then you can be a consistently profitable trader. Until you learn that, and it is a learning process, trading is hard, right? Trading is challenging. And that's why I recommend that you run practice trades using virtual money, or call it paper trades, I don't care. Use our tools, use paper trades, don't put real money on the line until you are consistently profitable on a lot of trades. Once you're consistently profitable on a lot of trades using our free volatility starter indicator pack, then you can put some real money on the line. $1, $5, $10, whatever you're comfortable putting on the line. It doesn't matter. $1,000. Some people are super rich, they don't care. They put $10,000 on the line. 100,000, doesn't matter. But never put more than you can afford to lose. And don't put real money on the line until you actually know what you're doing. And at Alpha Trading, there is no pressure on time. You can take months or years to learn this stuff. We don't care. We're not going to rush you. Some people learn it in a matter of days, a week or two, right? But most people take some months to go from our free trading tools to saying that they're consistently running trades, and then they ask us for a free trial of our pro ticket, of our pro tools. Okay, once you've shown that you know what you're doing, then we'll let you get access to the free tools. I mean, the pro tools, for a free trial. That's a couple get to try those out. Until you know how to use the free tools, there is no point in using our advanced tools. You won't know what to do with them, even though they're better. Like they'll tell you more information, etc., more powerful, whatever. There's no point, right? There's no point using the entropy tools that we have if you don't know how to use the volatility tools first. And there's no point in using our advanced volatility tools until you know how to use the basic ones first, right? Would you drive a Lamborghini before you know how to drive a regular car, a Toyota, a Honda, a Subaru, a whatever, a Ford, a Chevy, a GM? Would you do that? Probably not, right? You'd probably learn how to drive a normal car first and then move on to luxury cars. Because if not, then the danger you run is you're going to wreck an extremely expensive car, and you're probably going to do it the moment you start the car because you have no idea what you're doing. It's not like running a regular car. So, same concept here. Learn the basics first. It's totally free. And then eventually, if you're good enough and you actually want to step up your game and you want to try, it's kind of a no-brainer. You really need the advanced tools once you're actually seriously trading and you know how to use our tools. Once you know how to use our free tools, try the free trial. It's a couple weeks long, like I said. It includes a whole bunch of indicators that are amazingly powerful. And once you've used those tools, you'll see for yourself if you're serious about trading consistently, not just once in a blue moon, then yeah, it's a no-brainer for like $99 a month or whatever it is to get our Pro Trader tools. Like, it's so cheap, it's unbelievable. There's indicator packages out there that cost $300, $400, $500 a month, and they're complete garbage. We give you access to like 40 indicators that are all top of the line, the best indicators you can get in the retail market, because we use them ourselves. If we didn't use them ourselves, we would not make them available to you. There's a guarantee from me and from every other founder in alpha trading. We don't make available our tools unless we use them ourselves, and we use them a lot, and we test them like heck before we test the living daylights out of them before we release them. And very often we'll give a sneak peek to some of our traders in our community, and they'll say, "Oh my God, give me access to that now," and we'll tell them, "Hey guys, you know how it goes here. We don't release our indicators until we've tested the living daylights out of them, and we know that they're top, solid tools that you can rely on, period." That's what we do. That's what we do, and we like to give out that free education because, again, we are just sick and tired of seeing people in the retail trading space get wrecked because they've been lied to, misinformed, deceived from the very top all the way down. It starts at the top with those HFT firms and those other big capital market management firms and big banks and everybody else who wants to make that retail money come in, and because they know they're going to get that money. That's why the smart money, which is those big banks and those big retail investment houses, etc., and those big investment houses, they're the smart money because they know about volatility, right, and how to trade properly and how to make money when the assets are going up or down, and they want to make money from what they call the dumb money. And the dumb money is the retail market. Well, I'm a retail trader, but I'm not the dumb money because I know how to trade the VEPs that they use. And you can learn that too. So be not the dumb money. Be the smart money who happens to be a retail trader, right? And keep in mind that once you start trading successfully, consistently, you need to have, probably accounts on a few different places or know how to manage your trades very well, because once you start winning consistently, you will be a target for those exchanges, especially in the crypto space, which is unregulated, so they can play all kinds of dirty games, and they do. Anyway, there's so much to learn, so much to teach you, and be happy to do it. Come on into the Alpha Trading Discord.